Welcome back. I'm Jeremy Saffron. Hope you had a great weekend. All right, to the headlines. Gold is hovering around $3,400 an ounce today after an early session dip as traders brace for the Fed's upcoming decision and the possibility of these Middle East geopolitical tensions showing early signs of easing. Now, the broader metals complex is holding firm. Silver remains above $36, while platinum and palladium are up quite sharply, too. Now, soft dollar continues to lend support across the board. When we look at macro data, however, it's flashing more of a warning sign. The New York Fed's Empire State Manufacturing Survey fell to minus 16 in June. It's the weakest reading since January and well below expectations, reinforcing concerns that the U.S. industrial engine is losing steam. Now, bond yields remain volatile ahead of Wednesday's FOMC statement, where most expect the Fed to hold rates, but potentially signal hawkish intent on inflation and tariffs. And on the geopolitical front, Israel and Iran have exchanged fire for 4 straight days, but markets appear to be stabilizing on reports that Tehran is seeking de-escalation and renewed nuclear talks. Now, this is, of course, an ongoing story, but oil prices are down, equities are green, and gold, after that brief breakout, is consolidating once again. Now, last time he joined us, he called 3,200 a technical floor and warned that 3,400 could present resistance. That call held, and now he's back to walk us through what happens next. Joining me, of course, is our own Gary Wagner. He's the editor of thegoldforecast.com with his updated technical read on gold, silver, the macro forces. Great to see you, Gary.
Really good to be here. And these are the types of times our viewers need to really get an idea of how gold, silver, the dollar might react. There's a lot in the news cycle.
Yeah, there sure is. And as I mentioned, it continuously is changing. So hopefully this is still relevant by the time we get it to air. But Gary, let's talk about the last time you were on the show. You I think it was just last month, you flagged 3,200 as critical support. You said gold could rally to 3,400 before facing some resistance. That played out almost exactly, actually. Does the price action here validate your thesis? Are you still holding to that 3,600, 4,000 upside target over the next year? What are your thoughts here?
Yes, I am still holding to my upside target this year of 3,600. However, we hit an all-time record high on Friday, and so that came as a surprise to me. It wasn't, I could call it a black swan event. No one had any inkling that there would be the attack on Iran by Israel, and that, of course, moved the market sharply higher. So in that way, I underestimated the possibility. I do want to get that straight. But the interesting thing is, the fighting went on throughout the weekend. It's ravishing even as we speak, and yet gold is down, U.S. equities are up. And what that tells me is that the investors, market participants, professional traders possibly believe that this conflict will be contained between the two countries. And the fear on Friday was it spreading to a wider swath of the Middle East. And the fact that that doesn't seem as likely is why we are seeing gold trading lower today. That's my best read on it. And we'll talk about where it could go and support and resistance, but it does seem logical, even with the fighting, whether it's escalating but still elevated, that we are seeing gold down today.
Yeah, well said. And of course, we're watching the G7 happening in Canada, where some of the nation's leaders are meeting, and no doubt, obviously, talking about these developments too. We dipped below 3,400 this morning, as you talked about, at least on the spot side. I mean, what are those key technical zones that you're watching? Now, where are we going to go? Is this just kind of normal consolidation after a strong run, or do you see signs of reversal risk here?
I absolutely see signs that we could be reversing. We could be entering some sort of a corrective period. It seems as though the different items that move gold higher, which was the concern about tariffs, inflation, well, inflation is cooled. And so the one thing about inflation that we'll have to watch is, because of the conflict being in the Middle East, what is going to happen to the price of oil. If that spikes up as it did over the weekend, that could bring on inflationary pressures. But I do believe that at this point, there's a good probability that we will see gold at least trade sideways or lower for the short term.
Oh, interesting. Okay, bring up that gold chart. Tell me what you're seeing
Sure.
on those levels, because I mean, it's been a heck of a run, to be honest. I mean, if we're going to see that little bit of a little pullback here, what are your thoughts? Where are we going?
Well, yeah, it's been on a tear.
Yeah.
Let's go ahead and do this first. Kind of put it into perspective. Yeah, let me go to the other chart. I'm sorry about this.
No, it's all good. Okay.
We've had a huge play when we think about where gold was. We had the parabolic move that began in April, and then we did have what we called a range-bound market between the all-time record high at about 3,500 and then hitting a low back middle of May at about 31.28. From there, we've seen a solid rally from 31.28 up till the highs that came in on Friday, 34.54 right here. And then the open was even higher. When we look at the open that came in today, it came in around 34.70, but then traded tremendously lower, now hovering right above 3,400. This, of course, is the August futures contract, not spot. And so it's in a very precarious position. In terms of if we do see further decline, I've got a couple of red lines in here, and they represent a fib retracement from the beginning of this rally at 31.20 up to the high that came in today. And we're close to the 23% retracement. That comes in at 33.93. A break below there, we could see 33.40 on the downside if we do not get a deep correction. And I would assume right now that we could always see a deeper correction, but my assumption is that we're going to get a more shallow correction of a 38.2%. A deeper retracement, the deepest that we would ever see would be a 61% retracement, and that would take gold down to 32.50. I don't foresee that in the cards right now. Okay. So I believe that we could drift lower. You get a 2-day pattern simply called a engulfing bearish. Whenever you've had a sizable rally and you get this red candle as the daily candle that opens above the close on Friday and closes below the opening price. And so what we look for in terms of Japanese candlesticks is called a confirming candle. We want to see a red candle with a lower low and a lower high, and that would confirm that we have entered a correction. Right now, this pattern is ominous, and it shows that in fact could be the case.
Interesting. Okay. I mean, I wonder how long that correction's going to go on for. I mean, I mentioned that Fed meeting is Wednesday, and markets are pricing in a pause, but there's concern Powell could signal a hawkish bias, especially with these tariff and inflation expectations rising. If we get a hawkish hold, I mean, what does that do to gold's chart setup? Is there a clear technical trigger you're kind of watching here?
Well, you're correct in the statement you just made. There's the probability of a interest rate cut on the 18th is nil, according to the FedWatch tool. But what traders are looking for is forward guidance, which is exactly what you're addressing, how Powell is going to reference everything. And I think that what he's going to do, because of the fact that the conflict in the Middle East just came up and it could affect oil, we know that oil is a very sensitive commodity in terms of the input of inflation. He will mention that, and he will probably something to the effect of, we want to watch this closely because this could change things. Also, the tariffs that Trump has placed and not finished negotiation, they're still elevated. And so no one really has a solid sense to whether or not that will lead to more inflationary pressures. We know last time it did not, but we don't know what's going to happen this time. And so I think with those parameters, it's unlikely we get an extremely hawkish stance. I would imagine he's going to address the fact that they want to monitor inflation closely, because the potential of oil spiking higher and the unknowns with the tariffs are something that the Fed's going to keep an eye on. And I think that they'll focus on that. It could be hawkish, but I would genuinely be surprised if he didn't talk about the concern he had for the potential price of oil, the conflicts that are ongoing, and the potential for inflation with tariffs.
Yeah, I mean, with these real, yields still elevated and rate cuts being delayed, is gold vulnerable to a deeper correction before kind of resuming an uptrend? I mean, how long will this correction that you're talking about kind of go on for, Gare? What do you think? Through the summer?
Well, the one thing that all of these technicals can show us is if it falls, what are possible areas it could fall? If it rises, where will it possibly find resistance? Now we're looking at the potential for a fall, so where could it fall to? It doesn't really address a time parameter, how long that would take to work out. What I can say is that we know this is an event-driven scenario. We are, in terms of the basic Elliott wave count, which is something that I look at, back at the beginning of a cycle, this move from 31 and change up to today's high is what we're labeling as a wave one. After it hit this top at 35 plus, and then we had what's called an A, B, C correction. So an Elliott wave, a bull count, you get 5 waves up, where waves 1, 3, and 5 go to the upside, the prevalent trend direction. You then get a correction. It works out in many different ways, but in this case, an ABC is what we've labeled it as. And the clock restarted back when we hit this low. So this is our wave one. This red candle, if we get a confirming candle, and I believe that's likely, will signal a wave two. A wave two can be a market move anywhere between, on the highest end, about 33.90 to 33.41. That's these red lines. And so how long it would take to kind of work out, I can't say. A deeper correction could take us to about 3,300. And I don't see it going as low as a 61.8%, but we could see gold go to 3,300. I think it's more likely that we'll see it go to 33.40. And that's basically what I'm looking at right now.
Okay, so still a pretty strong technical base there. I got to talk about the macro alignment because we saw this Empire State Manufacturing. I mean, it plunged to negative 16. I mean, it's the weakest in 5 months. It's another piece of soft data alongside these weakening job openings and, of course, Treasury demand concerns. Do the fundamentals, now back the bullish technical case for gold? I mean, central banks are buying even more gold than they're reporting, according to Bloomberg here.
Yeah. I mean, you don't want to count gold out for a couple of reasons, and central bank accumulation is probably the primary one. However, you're going to see peaks and valleys, even if the long-term trend, I believe, is still up. But I believe short-term, we are due for a correction. That's why I've given you those numbers there. But I do believe that the macros behind everything right now are going to move gold higher, but it doesn't have to, but typically corrects, which is a good sign of a bullish market, is to have a strong move up and then give back a portion of it. It's kind of like 3 steps forward, 1 step back, 2 steps forward, 1 step back. And that's what I believe we're going to see over the next, say, 2 to 3 months.
Okay, we'll be watching closely. Okay, before we let you go, we got to talk about silver. I mean, it's been interesting to watch a lot of people talking about it, Gary. I mean, it's above $36, and it's outperforming gold on percentage terms. You've told us before that silver trends to, run once a breakout is confirmed. Are we seeing that play out? And what does the chart say about the momentum, or is it even exhausted?
Here's what the charts say. I do believe that if and when silver breaks above 37, we should get a sizable move, maybe as high as $40. However, you can see that back on Monday of last week, it traded just to 37, but did not have the power to run through it. We then saw it correct on Tuesday. Wednesday, and then you've got these very small body candles representing Thursday, Friday, and today. We see it consolidating right above $36, but it seems as though silver didn't have the ability to break above it. Whether it's because you had profit taking come in, because realize we had a long spike up, a tremendous spike up over the last, say, 3 to 4 months. And so it's very appropriate that those that have been long are taking profits. Also, you could have the professional traders going in and basically selling into $37, saying that that is not something that's going to happen now. But typically when you get new all-time highs, that's not the case in silver. It's we've been here before, but it was years ago, but we haven't seen it. So typically when we get a particular price point challenge, it doesn't occur on the first attempt. It might try it once, sell off, try it a second time. And I usually say third time is the charm. So I'm not counting silver off or out right now, but I do believe it's going to have some real momentum to surge through 37. And we need to see it move through $37 per ounce on a closing basis and a couple of days of a sustained basis before I'm going to get bullish enough to say that now we'll see that breakout. I believe that that will come, but it's not occurring right now. And especially if gold is under pressure, these things are softening. We're getting a little bit of a tandem move with silver. Although with the equities back up near all-time highs, there's the case to be made that there's high utilization, and there's a case to be made that the stocks are a little short. So don't count it out, but it was an unsustainable move that we saw last week. And I believe silver will attempt it in the future, whether it's the end of this week or next. I think don't write it off yet, but it's not going to occur overnight.
Yeah, okay. I mean, it's such a funny one. We talk about it obviously all the time, and every time silver approaches a breakout level, it stalls. I mean, it's kind of who and what is capping the move, and what changes that dynamic? I guess third time is a charm.
Yeah, and the same thing is you've got to realize that even in the case you can make that with gold. When gold hits $3,500, even after everything that happened, it wasn't a sustainable move to have it move above it on a closing basis. So we've seen 3,500 plus in gold challenged twice. And at least this last time, it could not sustain that level and has moved definitively off that price point down about $50 in trading today. So both of the precious metals, silver and gold, went to new levels that were unsustainable, at least right now.
So, Gareth, for traders out there, I mean, what's the move here? You're just kind of waiting. You're not buying the dip. You're just kind of waiting and seeing what this correction looks like on the gold front.
We want to see what this correction looks like to see if it's going to be sustained or just a short blip. And we do want to look to buy these dips. The question is timing, when, and what price point to do that, which is why when we looked at gold, I gave you a couple of levels to watch. And if gold continues to drop and goes to those levels, you want to see a sign of what we call a V formation, in which we see buying coming back into the market. Paul Volcker put it best: trees don't grow to the sky. They never have. They never will. A price move to the upside is not going to just go forever. There's going to be a limit on it. And at that point, you're going to look for it to correct. However, if the variables that took gold higher are still prevalent in the market, you would look for it to be a correction and not a pivot from a bullish to a bearish market. And that should be the key in terms of what traders are watching, in that I am still bullish on gold, but I do believe we'll see a correction here. That doesn't mean that I believe that the bull run is over. I believe that a correction is possibly imminent and occurring right now. And that's a difference.
I like it. Okay, yeah, I also like the Hawaii 5-0 shirt, my friend. Okay, listen,
Thank you.
well, we're gonna keep paying attention to the fundamentals just in case the macro environment shifts. Gary Wagner, of course, is our very own and editor of thegoldforecast.com. You also, as I mentioned, have been totally right, and we always have our audience writing in and saying how much they love you, Gary. You got a special offer for our audience?
I definitely do, because we really believe this is an important time to be looking at the metals. And we believe that a lot of the viewers might get value out of our premium service, which offers 5 videos per day. If you go to our site, thegoldforecast.com, and you decide to try our premium service by putting Kitco in the coupon box, you'll get 30% off for the lifetime that you've signed up for. And that's a good value, and it's our way of saying thanks for listening, and we hope that we're of value to you.
I like it. All right. I hope all the traders out there can make a little bit of upside right now in this market. It's crazy. It's moving fast. Gary, thank you for your time. Appreciate it as always.
Thank you so much for having me.
Cheers, Gary. All right. I'm Jeremy Safran. For all of us here at Kitco News, thank you for watching. Hit subscribe, like, and tell your friends. We got lots to come this week. Stay tuned.